Hi, and welcome to the Future of Day Trading Remastered for 2022. In this lesson, we'll be discussing cycles. All right, now let's talk about cycles. Cycles are a type of trend work that shows you reversal in a move. A cycle is something that shows you we're in accumulation or we're in distribution, and we're losing moves or creating more moves as time goes on. You've got to think about trend architecture and trend arraying in this scenario, but we're going to create a couple simple, easy to follow rules so that we can understand cycles a little better. So let's talk about the rules first. So what happens is you have kind of this counting of cycles, like a 1, 2, 3, 4, 5 type of scenario where you're building up to breakouts. So 1 being the very first moment where a breakout wouldn't be happening yet, 2 and 3 being the more intermediate moments, and then 4, 5, and 6, and maybe even further being the final moments of something. So the higher the number, the more finalized the moment. So a cycle is a version of tactic that we use for trend work, a trend architecture, if you would. So a cycle simply looks like this. You have one trend, and when it breaks this first trend, it creates your next trend to the point where the pullback happens, like so. And then you would have this, would make that trend there, and it would pull back and then break that, and it would create a new trend. And this is what's called cycling. It has these moments where something breaks in a chart and it goes after these breakout points. And this would be the 2, the 3, the 4, and the 1 would actually be where price drops, finds a hold level, the hold level or the ladder point holds up the move, and that creates your 1. So that would create there the number 1. So when you have the actual drop of price to support something, that creates your number 1. So that's the first part of a cycle when you drop to a price. Your second part of a cycle would be when you break that trend. So this would be the number 2 when you break through this trend. So we've got a number 2 here. The next moment in time, which would be number 3, would be breaking through that next trend right here. This would be the number 3, which would be kind of like midway through a breakout. And then the number 4 would be the next trend, and 5, the final moment. So this is typically the way that breakouts happen when you're talking about trend work. And then the final trend that gets created right here, you usually have like this little micro trend that gets created. And this is the 5. And when that breaks, the move is entirely gone. And it has a large breakout, much like or how origin levels have a breakout. You can kind of think of this as the breakout that happens with trends. And then so we'd mark that as number 5 here. So this would be number 5. And this is what's referred to as a cycle of a move. It's cycling through accumulation or it's cycling through distribution to have a moment where it would break out. So let's take a look at an example of cycles and how they work. So let's just go ahead and delete all this. And let's maybe just go to a daily time frame here and try to find a trend that's inside of a range. So you can just simply use your accumulation to accumulation candle. We're going to save this, and I don't quite remember where we were. So let's just pick a random spot. Well, middle of the screen, that looks good. So we're just going to go right here, and you can use your daily to daily candles here. So if you were to build a trend here, what you would do is you'd find this daily candle and you'd find the next one there. So this would be like you break this. This is the number 1. This is the number 2 after the number 1 gets hit. So after you stabilize a move down here, right, you have the stabilization of the move. You create your trend right here on the smaller time frame, even if it's a slight degree. Remember, this is still a trend, even if it's a slight degree. You've created your number 1 right here, right? This is your number 1. When you break this, this is your number 2. Well, this is a little too far in time frames. We still have very, very linear moments that are still happening. So if we actually were to go down in time frames, we could just simply do this with like the next range. We would do the same thing. We'd find the accumulation candle. We can see that these hold levels were never hit. Like this was a hold level that was never hit. So we can simply build a trend off of that accumulation candle and go like this to say, hey, here is the trend accurate to represent what you're doing in the move. And this is going to be the exact same thing on both sides. So we have 2 trends built out now, kind of the larger trend that encompasses the more exterior range that would look like this, and the inner range of the more localized move, which would be like this. So a range or trends within trends and ranges within ranges. These would then have local, global, and legacy moments, which represent the breaking of their trends. So if we were to go here in the moment, we could go and we could find that next accumulation candle, which was right here. And we could mark, let's rewind this a little bit so we don't quite see the breakout moment yet. We would mark the cycle as it's trying to start to break this trend. If this was the legacy component of the move, in order to break that, you'd have to cycle towards it. So what we would do is we'd simply do this. We would take our accumulation candle to accumulation candle, just like this. And that would create the kind of first breakout moment or the first breaking point, which you can see hard closed right there. So you kind of have your first breaking of a trend, or you could simply adapt it to that candle right? We don't adapt it to the top wick here. We adapt it to the candle that hard closes and breaks it. And let's zoom in here to make sure we're not missing anything. That's clearly a hard close. So we can go here, and this is going to be the final moment for this trend as it's already hard closed and broken. And you get not only a perfect accuracy, but you now have a legacy trend, a global trend, and now you can create a localized trend off of that, which would be right here. And you can create an even more localized trend, which would be right here. And then you could create another one that would move even further down from that, using accumulation to accumulation points to create a cycle of a move that would show you, hey, once this hits that number one moment, which is a hold level, and it can be a ladder point, it can be a hold level, anything that's not hitting the break of the move, which in theory would be back here as you're laddering from here to here, anything that could actually ladder this move would also account for a hold level as well. So now you have anything that holds this move above this line is number one. It could even go here and test it as this is still holding above the move. Because it's an angled degree from a trend. So that would be your number one, would be anything there. Your number two here would be this trend. It would then break and try to attack the number three. The number three would then be this, the number four here, and then the number five, which is kind of your final breakout moment, which is then just going after your legacy level. So you can quickly see how by building this trend architecture and understanding, even with some simple few trends on the same time frame, only using the 4 hour and not really going through and doing any advanced work here. This is actually quite simple work that we did. It's quite minimized down to a point where it's like, hey, there's nothing here to really go through. We just have one time frame, and all we did was erase some trends. So actually very quick work. We can see how a cycle can start to create the attack of a legacy trend, which is just the larger breaking of an even higher time frame cycle. So that once you get to this point here, you can just hit play and let this thing run through. You can actually see how much this catapults, just like we said with an origin level. You can see exactly how much this legacy trend used a cycle by moving down through timeframes and used a cycle to create this breakout moment, just the same as an origin level, and breaks right over this trend. And this leads to a major market movement. You're talking about 45% here. This is life-changing money if you're using leverage. And it all starts with the beginning of a cycle where you break the number one, you have the number two break. Oh, sorry, you hold the number one, you create the number one, which is the hold of the move. And that would be actually a pretty cool example to go through now. Let's do that. Let's go through and find where in this move you could have actually placed a buy order based on hold levels. So you create the number one by starting to break through this trend. Okay, that's great. Now, where could we actually create a buy for this? So we just broke through trend, and it's like, oh man, for the first time, all this distribution trends, we're finally breaking our first localized trend. So you could start by putting an hourly level there and seeing through time if that holds the move. And all you did was mark an hourly level, and the hourly level never hard closed, and you start this attack on the trend after you've broken your cycle. Well, you could get even more refined and more accurate if you went down to lower time frames in front of that hourly. So now we can say what's in front of this hourly that could be an even lower time frame, which would be right here. Or prior to this hourly, this is the 15-minute time frame being created now. Prior to this hourly, you could have used this right here, which would have been that 15-minute level. So now actually, instead of using that, you could have even got in on this hourly trade on this 15-minute level here. But Cotton, I want to get more accurate. Well, let's see if we can. Let's see if we can find an even deeper hold level. What about this one right here? This was a hold level, and it leads you to this one right here. You would have gotten perfect entry before a major breakout from 29,000 all the way up to 50-some thousand. Talk about 100% trade is crazy. You're now talking about money that's life-changing money. And if anybody remembers back in the Twitch days when I was streaming, we called out 29.2, and that was a huge moment. That was the beginning of a cycle for this entire move. So for other reasons, this was meant to be the beginning of a cycle in what Bitcoin's recovery would be. And one of my famous moments on Twitch where I said, you know, you're going to buy at 29.240. I think it was 29.244. It's all on my Instagram page and all that stuff. If you guys want to look at that. And we actually nailed it within $1 of the trade. And then it broke out 100% up, and it was like this famous moment. But this is one of the reasons why I was able to see this, because for other reasons that are more advanced than the future of trading, we were destined to create a cycle here. So with that in mind, it was just a matter of time before you get within $1 of this price point, and then you launch straight up and over, and you were destined to create this cycle here from larger time frames. So just moving forward, and once you're a master of the charts, you can start to kind of see this stuff. And then you can see where a cycle that was meant to be created actually propelled itself up through all of these moments and created itself a massive breakout. And again, just like an origin level, it's these moments that create these major breakout points and these major breakout components in our day trading chart. So think of this as a moment of polarity too, the very beginning of what could create a cycle, or the very beginning moments of what could break a local trend is going to end up starting to create a cycle of accumulation or a cycle of distribution. So when people think of any type of theory where it's accumulation or distribution, well, this is what happens before that. These are the moments that happen where you can see what creates that accumulation and distribution, instead of waiting for a moment where something's already broken out. So if you were to delete all your drawings on this chart and somebody would say, oh, well, you're in accumulation now, look at this price. Yeah, sure you are. You're in accumulation, but there was way earlier moments to find it. So that's a breakdown on cycles on how they work. They work on both sides of the chart, accumulation and distribution. Your job is to go and find cycles and start making legacy trends that can create global trends, that adapt time frames, always moving down, respecting the effect of time, always moving forward in time and down, and finding those moments that can say, here's a large legacy trend that can create a global trend, that can create a localized trend, that can start to have an even more localized trend that would be the first moments of where a cycle could be created. And if that cycle can create, and we can create that second localized trend or that extreme localized trend, and create a great grandfather out of the legacy. So the great legacy level to the legacy level to the global to the local level, which would be 4 layers deep now instead of just 3, which would be local, global, legacy. Then you can see, hey, maybe we're starting to create a cycle, and find the beginning moments of accumulation even before it happened. You could probably see it on famous stock like GME before its big breakout. Well, let's go take a look, because GME back when it was pre-breakout had this exact same thing. So you had the very same thing, the break of the range, the start of a move. And what would have created this cycle moving down in time frame if you were to even look at something like GME breaking its move? Well, you would simply go and you would mark the weekly to weekly level here. Let's delete it and start over from the very beginning. You would go and you would mark your weekly to weekly level right here, that hard closed here. And you could create trend architecture moving down from here. So that's the legacy. This would be the, come on. You'd have to walk through this to see which part. So we're going to do that. It goes to there. It hard closes to there. So people can kind of stop this replay and follow me and see how I'm doing this. So I noticed this one hard closes. So we're going to move that to there. And then this one is the hard close candle right to there. So this is actually important for trend accuracy. And then we could create what would be legacy, global, and then we could create the localized part of this move, which would be this trend to this one right here. So now you've got global, local, legacy, and then you could even create one further, which would be in time, this guy to this guy here, and it eventually ends up and settles right here for when you're moving through these time frames and you're saying, okay, well, this is not available to use. You would have to use this, and then you'd have to hard close to here and here and here and here. And this would be that like ultra localized move where if you were to go to GME and see what actually broke GME out of its massive breakout when everybody said it was, manipulated on the charts and all these things. Actually, that's incorrect. It just simply had a move off of a hold level from the past. So whatever move held this up in the past from back here and laddered the move on a bigger time frame, probably a break level on a monthly, right? So if you were to actually go and look at this, here's the break level on the monthly. Well, if this fails to hard close, then you would have a point in time where, hey, look, there's no hard close in this moment right here. It never actually hard closed its break level, which would create its polarity point in the future. And then you start your cycle, which gives you a very clear indication of, hey, look what happened with GME. It tried to break its all-time low. It actually held its move. And now you've created what is the beginning of a cycle off of accumulation. So then you could even just go and hit play here, let this thing move through, and you could see where these cycles start to create. And GME finds its points of accumulation where you're hard closing candles to the next hard close. So if this was creating a cycle, this would have been your 1, and the break of this trend here would have been your 2. So when you find the bottom, that's your 1. This would have been the 2. This guy here adapts to right here. That breaking this one has a pullback. This would have been your, come on, drawing tool, stop making these little errors. This would have been your 3, which then just simply moves your trend to right here, which would have made your 4. Let's just hit play. which is right there. And now you're getting really close to breakout because you're coming up to the final moment in this chart where if this thing has that hard close breakout, you're going to have that massive move up. Trend is compressing it. It's still not there. There it is right there. That's that 5. Give you your final moment on trend before you have a major breakout. Notice how you never hard close this level that you need to. And then you have the break right here, which is now your last part of this chart before a massive breakout happens on GME. You have the compression of a move. You have that right there, which is indicating your final break. You're now into the larger parts of the move, that's it. It's over for GME. And then people were not quite sure why GME had a breakout when it did back in the day. And then it becomes very simple to explain once you can understand the criteria and the origination points of these cycles and how they work. So you could actually go do this with any stock. You could do this with stocks back from like the 1910s. You could do this with GME. You can do this with the S&P 500. You can do this with Bitcoin. You can do this with stocks from the 30s, the 60s, the Great Depression, the housing crashes. They all follow these cycle rules. So this is the really cool thing that I love to show about cycles. And I always do it with a random coin because there's no difference. I picked GME randomly today because it was what was been trending for the past year. You could do this with AMC as well. You could do it, like I said, you could do it with anything. And it's really cool because you'll see the same story always being told. The story of the cycle against the breakout failures, which create ladder points and create cycle breakouts in a move. And there you have it. You have the cycle breakout of GME and how it originated. And some of the magic when you guys see me calling out, hey, there's back in the day, top of Bitcoin at 64.6 or 29.2 is the bottom, and so forth, and all these hundreds of things I've done. So cycles are a very powerful, important part of our charts. And the reason why I mentioned some of these callouts is because a lot of them are to do with cycle work. And a lot of them are to do with my ability to see how things can cycle and where they can start and stop. So that's your lesson on cycles. We'll see you on the next one.